Hello folks, this is Raj Sastry from Raj Option Trading. Today is April 17th, 2021. I want to do a quick recap of stock market activities last week and take it from there. So last week we had Ethereum and Bitcoin surged higher, natural gas traded higher, copper miners traded higher, metal mining stocks are up, material stocks are up. We got some of these here: SID, SHW, Dow, DuPont, and we got biotech stocks are up: Translate Bio, FGen, Novavax, BNTX, and mRNA. Beverage stocks are up like TAP, STZ, which is Constellation Brands, and National Beverage. Bonds are down, Bitcoin stocks are lower. All these hot stocks like Bit Digital, Silvergate, Canon, Marathon Patent, they're all down. Cannabis stocks are down. We have Grow Generation, OGI, NBEV, and so on and so forth. Clean energy stocks are down. Got Blink, Fuel Cell, ChargePoint, Plug, and we got electric stocks are down: QuantumScape, GOEV, LI, which is Chinese automaker, and the China internet stocks are down like IQ, and TME. Solar stocks are down: SunPower, Jinko Solar, Solar Edge, Enphase. And space exploration stocks are down. Space as an example, looks like Richard Branson sold some of his stocks there. And semiconductor stocks are a little bit taking a breather, not too much down, but a little bit breather, like Kopin, Intel, TSM. And we got few software stocks like Digital Turbine, Pinterest, Infosys, and Zillow. And few Chinese stocks are down, mainly because of the debacle of ArcGo's fund liquidation. So with that, let's jump in and look at some major trends and take it from there. From a major stock market indices, as you can see here, all the big stock market indices like S&P 500 is up. The Dow Jones 30 is up nicely. Nasdaq is up nicely. Um, Russell, which is small cap, it's taking a little bit breather here, as you can see here. As large cap stocks roared, Russell is taking a little bit backseat here. Bonds are a little bit, I think they showed a little bit uptick here. And same story here, a little bit uptick, not too much. Crude oil is going higher. Friday they took a little bit breather, but generally it's trending higher. Gold is, they are a little bit trading sideways, a little bit up, but now there is small lower tick here. But generally for the week they are up, and dollar is down. I think this is helping dollar down, helping commodities and some of these even international exposure stocks. So with that, let's jump into big ETF. Same story here. Major indices like SPY, Dow Jones Industrial Average, QQQ, they're all up nicely. Lower cap, Russell 2000 is down a little bit. And TLT, which is a bond, that's down. Gold is nicely going higher. XLP, which is consumer staples, that's going higher. And same is XLU. And XLK, which is the technology, is going up. And semiconductor is a little bit flatlining. I think they had a very nice last week. Now they're taking a little bit breather here. XAR, which is really big stocks like Boeing and Northrop and these defense contractors, they're taking a breather here. XLE, which is energy, they're taking a little bit breather here. And XRT retail, they're slowly going up, as you can see here. I think people are waiting for a recovery. I think as more and more people take COVID shots, probably people will venture out. So that's why retail stocks are slowly going up. IYR, which is real estate, doing very nicely, as you can see here. That's the good news here. People are buying houses. XLF financials, they're doing nicely. I think we had the bank earnings also. I think a little bit tepid on Thursday and Friday, but generally higher. XLI, industrials, they're doing well. Think about Caterpillar, Deere, some of these big industrials. So with that, let's jump into looking at S&P 500 and SKEW and VIX. S&P 500 this is a 5-year chart here, doing very nicely as you can see here. And SKEW, I'm a little bit concerned here as SKEW goes up. That's a danger sign here. As you can see, a SKEW went up back here, and stock market kind of came down, and now SKEW is trying to make its way up. It's not a major red flag if it is crosses 145. I'm worried, but now I'm okay. I'm watching this. If it crosses 145, then we got to make sure reduce the exposure to stock market a little bit and look at the defensive. Maybe buy some VXS options and TLT and whatnot. And as you can see here, VIX is really going down slowly. It's good to nibble some VIX options, maybe say 3-4 months out, buy some call options and keep it from there. So with that, let's jump into some of these bigger trends here. The bond itself, as you can see here, trying to make its way up slowly last couple days. And because bond is going slowly upwards, the interest rates or yield is coming a little bit down, which is an inverse ratio. And we got dollar itself is trending lower, which is helping commodities and bigger stocks with the exposure to international market. So with that, let's jump into few big cap stocks. All these most of the big cap stocks are doing nicely. Microsoft up very nicely. Apple, I think it's still has more room to go. I think it reached around 145 or so earlier. It's slowly but steadily making its way higher. Amazon is doing nicely. I think they had some tremendous updates. Now it's kind of taking a little bit slowly. Facebook is very nice. It's doing very good, acceleration here. Taking a little bit breather last week, and Google, nice. Netflix, I think it's a little bit taking a breather at this point. And we got Nvidia doing very, very nicely. I think stock has shot up so nicely with all the semiconductor shortage, and company itself is doing great. And J&J with their COVID vaccine issues, blood clotting, I think stock is taking a little bit breather, but still it went up. I think it may be good to buy some J&J on a down day and keep it for long term. It's got a very nice balance sheet and incredible credit rating. It's a good stock overall. PayPal, it did very nicely during the lockdown. Now it's kind of taking a little bit breather here. I think if this pulls back a little bit, it's good to buy a little bit and keep it for long term. UNH is doing very nicely, as you can see here. I think probably at this point we should not be chasing this. We will wait for this to pull back a little bit and then buy. Merck, I think it's good to nibble a little bit. Stock has fallen down, but it's a overall good stock, good to buy and keep it for long term. Medtronic is going up. People are taking or making these elective surgeries because people got the COVID shots. It's good to get some of the surgery done. It'll give better lifestyle for most folks. And JP Morgan, as you can see here, I think it's a little bit tepid here. Their earnings, bank earnings are out. A couple of the earnings are out. A little bit tepid here. Berkshire doing nicely. Visa is doing pretty nicely, and CMA Chicago Mercantile kind of sidelined for a long time. I'm a buyer of this stock, slowly but surely. This is a very good stock, but kind of fallen off the grace of late. So with that, let's jump into some major trends to see how we can benefit. As you can see here, this is we are basically sorting this by 5-day. On a 5-day basis, many of these indices like semiconductor, like we talked about, it's a little bit flat to down. Dollar is down, and XAR, which is this major defense contractors like Lockheed Martin and Boeing, they're down a little bit. Otherwise, all the other major ETFs, as you can see here, they're all up. And many of you, you may not want to play too much in stock market. You could buy some of these ETF for long term and keep it. For example, SMH has done very nicely. 1 year 94%, 5 year 392%, 10 year 732%. Very low expense ratio. And it's almost near the 52-week high. Whenever this stock market comes down, you could buy some SMH, which is a semiconductor ETF, or even XRT, which is retail. And some of these huge ETFs like XLK, you could buy some of these highlighted ETFs and keep them for long term. They will do very nicely, and these are low expense ratio, as you can see. So if you really don't want to play the stock market game, it's okay to buy some of these bigger ETFs, which are doing nicely here. Next, let's look at ETF winners. As we talked about, the crypto itself, the Ethereum and Bitcoin, they are doing nicely, and the natural gas is doing good. Oil is also doing well. Copper is doing well, and as you can see, utility is doing well. Materials, Nasdaq itself is doing well. So, some of these ETFs, as an example, IBB, small expense ratio as stock as ETF had done very nicely, 346% for 6 years, 65% for 5 years, I mean, for 346% for 10 years. Some of these big ETFs like XLU, XLB, you could buy it and keep it for long term. And now we look at ETF losers. Here there is, we all know about this block, which is, Bitcoin type shares, blockchain shares. It's really down, as you can see here, down 6% for the week, down 5% for the 10 days, down 36%, up 36% quarterly, which is good. So overall, I think these Bitcoin blockchain type shares, they're taking a little bit breather here. I'm sure many of you may be feeling a little bit pinch here. I think eventually they will do well. And same story with the clean energy stocks like solar clean energy stocks. They're also down for the week, down for 10 days, down for the month, and even down for the quarter. So I'm sure many of you might be hurting a little bit. I think these stocks will come back soon. I think it's okay to wait on them. And then we got some of these clean that we talked about. Solar, again, solar is doing a little bit, taking a breather, down 1% for the week, down 5% for the month, 9% for the month, and 20% for the quarter. So I think solar stocks are really taking a breather. I'm sure many of you may be feeling the pinch here. I think it's okay to wait a little bit and wait for the bounce. And we'll jump into small cap winners. From a small cap winners perspective, these are all small cap stocks. And as you can see, I sorted this by 1 week gain. The stock on the top here, Brooklyn, 23% gain for 1 week. That's a huge gain. And I also highlighted some stocks which are high valuation. For example, Hldgs, high valuation. And I like some of these stocks with the nice sales growth. As you can see here, 23% quarter over quarter, 21% for the year, and nice gross margin. So stocks like this with the nice sales growth and gross margin, they will succeed and they will make you richer. So I like Luminex, CBD, Regal, even 111, which is Chinese play. I think that is done nicely here. Translate Bio and Dynavax, Precision, Fortuna Silver. With all the minings going up, I think Fortuna Silver has done nicely. As you can see here, it's done around 5%. Sorry, 5% for the week, which is good. At home, also done nicely. So Many of these stocks, as you can scan through this, if they are at their 52-week high and if they have surged very highly, I think then I would wait for it. I would not chase them. For example, some of these stocks here, say HMHC, Huffington, I would not chase it. I would wait for it to come down. But some of these stocks which have gone down very much, like for example, Translate Bio, it's okay to buy some and hold it. And same story, maybe Luminex down 11%. It's okay to buy a little bit, but I would not chase them when they're at a 52-week high. So from a loser perspective, we got many losers here, Fortress, Mohawk, and the ones I highlighted here, because they got nice sales growth and nice gross margin, I would be a buyer of these stocks here because typically with the nice sales growth or a revenue growth and a nice gross margin, I think these stocks will do nicely, and they're down so much for the week, and many of these are down for 1 month, and some of them are down for the quarter. And they're also off nicely from 52-week high, as you can see here. So my favorites are the one highlighted in bold color, and I would watch out for some stocks like UAVS, AgEagle, high PS ratio, and Microvision, same story, high PS ratio. And I would watch out for the high PS ratio or valuation, so that way we don't buy too much when the stock is too high. And I will also watch for high short float ratio or short ratio. If the short ratio is above 10%, then I would see, is the stock already fallen down? If so, is it showing a sign of recovery? How is the fundamentals? Is it good from a sales growth perspective? If so, I'm willing to nibble and accumulate a little bit. And with that, let's jump into next set of stocks here. These are weekly winners. As you can see here, they have done very nicely for the week. 32% for Grupo and 15% for Lattice. And I would not be chasing this. As you can see here, many of these stocks like Lattice Semiconductor, it's almost at the 52-week high, just 0.80% off of their 52-week high. I will not be chasing them. But if you look at some of the stocks like Grubhub as an example, nice revenue, they're down 15%. And even the Angie here, I think they just started as a public company a while ago. Again, that has done nicely. I would not be chasing the stocks at 52-week high, but if they're off a little bit from 52-week high, if they're showing some sign of acceleration, I would be buying some of those. The stocks highlighted in bold and bold are my favorites. I'm willing to buy AI, which is C3 AI, Tom Siebel's company. It's fallen off the grace, down 63% for the year. Now it's showing some sign of improvement here, up 9% for 1 week. I think this is going to bounce back nicely, and I think it's our chance to buy some and keep it for long term. And Sonoma Energy is again a solar play, down 33% from 52-week high, trying to show some sign here. I think it's okay to buy this one too. And IIVI, I like this one too. This is a good stock, and they're down 18%, now showing some sign of improvement, which is good. So with that, let's jump into next section here. These are mid-cap weekly losers. And I also highlighted some stocks here which have done nicely from a sales growth or a revenue growth perspective and good gross margin. Again, I'm willing to buy some of these stocks which are highlighted here, like Adaptech, Marathon Digital, Himax, Silvergate, Digital Turbine. Digital Turbine is one of my favorites. It's a stock had done very nicely last year. Now it's off 26% from its 52-week high. Now it's showing some, it's down 13% for the week, but I think this is going to bounce back very nicely. And then we got cannabis stocks down. I think Afria and Tilray are merging. I think probably Afria is going to be a good buy going forward with this merger. I would be willing to buy a little bit and take it from there. Grow Generation, I think it's again a good stock, fallen off a little bit, 12% off for 1 week, and they're off 30% from 52-week high. I'm willing to buy a little bit of this stock and take it from there. Even Skills is good, as you can see here. It came down 12% from in last week, down 67% from 52-week high. I'm planning to buy some of Skills and take it from there. And EXPI, this is one of the nice real estate platform play. I think stock is off 12% for the week and 59% for the year. I'm willing to buy a little bit. And same story with Editas. It's a good stock, down so much, 65% for the year. They're into some of these medicines. I think I'm willing to buy this one and hold on to it. Stitch Fix, it's it goes up sometimes, comes down sometimes. Looks like they got some revenue growth. I'm not aggressive buyer on Stitch Fix. I would wait for the quarterly earnings to play out and then decide whether to buy or not. So with that, let's jump into next section here. These are large cap winners. And many of these, as you can see here, they're almost at the 52-week high, but I'm willing to buy in stocks like Novavax, which is down 31% from 52-week high, and stocks like DocuSign. DocuSign is a good stock with all the COVID shorts. This stock has come down a little bit off late, but now it's recovering nicely. I'd be willing to buy a little bit of DocuSign on down days, but I will not be chasing the DocuSign at this point because it's up nicely for the week. So with that, let's jump into next section here, large cap weekly losers. So many of our electric vehicle plays like QuantumScape, Plug Power, they're all down very nicely for the week, very badly I would say. I'm willing to buy some QuantumScape. It's into solid state battery technologies. I think there is a short seller story around this company and why this may not be a great stock. I'm willing to buy a little bit even though they have no revenue, no sales. I think they're still trying to work out their battery technology. I think I'm willing to buy a little bit. Same story, Plug Power, down 15%. I think it's okay to buy a little bit and keep for long term. Pinterest has gone down 10% for the week. I think there are some analysts are raising some concern. I think it's okay to buy a little bit here and wait for the earnings and buy more. KE Holdings, China's play with the real estate market. I think stock is down. I think it's okay to buy a little bit. These folks already released their earnings. I think it's safe to buy at this point. I think it's a good play. Then we got Infosys, Indian IT company. Their earnings is out. They're down 7%. I think this stock is okay to buy a little bit and hold it. It will not go up drastically, but it's a good stock. It's one of the major IT company in India. Tencent Music, it's gone down drastically because of the this whole Archegos fund debacle. I'd be willing to buy some Tencent, and same is the story with the DraftKings and Palantir. I'm willing to buy these two also. These are down nicely at this point. Good to buy. And even stocks like Carnival and Norwegian Cruise Lines, Royal Cruise Lines, all of them are down because there's some senators are saying, hey, you can't use these cruise lines, for a long time. I think it's okay to buy some because these are good recovery plays. And when economy opens up, people go on cruise. These will come back nicely. Next is mega cap winners. Nvidia up nicely, just down 1% from 52-week high. I will not be chasing this. Tesla again, it went up off late. So I think with these stocks, maybe with the exception of Alibaba here, I will not be chasing any of these. Maybe even Tencent is okay too, but otherwise I'll not be chasing this at this point. I will be waiting for this to cool off a little bit and then buy. From a mega cap losers, Intel has a new CEO now. He came back. He came from, I think, VMware, if I'm not wrong. I think he's going to do very nicely. But stock is just off 5% down for the year. I will not be chasing this. Probably I will be, maybe Salesforce is intriguing at this point. I might buy some Salesforce. But otherwise, I'll wait for these stocks to cool off. Even PayPal could be okay to buy a little bit, down 12% from 52-week high. But otherwise, I'll not be chasing this and wait for a little bit cool down. So now let's look at some charts and see where we can put our money to work. So blink charging, as you can see here, stock has come down and now it's trying to make its way up here. And also there is a news that city of Plano, Texas, it upgrades its EV charging infrastructure with the blink. I think it's a good stock here. I'm willing to buy a little bit and take it from there. And if you look at blink charging, stock price is $36 and nice sales growth, 79% for 1 year, quarter over quarter, also very nice sales growth, good gross margin. Valuation perspective, it's a little bit high, but since the stock has fallen down so much, I'm willing to buy a little bit and take it from there. And Fibrogen, this is again, they had a FDA approval related issue last time. Looks like probably they have fabricated some news and some results. Stock has fallen off very badly. I'm willing to buy some here. It's trying to consolidate, as you can see. RSI is also consolidating. I'm willing to buy this little bit and hold it for a long time. I'm sure this will bounce back. And if you look at Fibrogen here, from a sales perspective, quarter over quarter, it's up very nicely, 715%. It's got a high short ratio, as you can see here. Same is the story with blink charging. And it's going up, as you can see here. This week they went up by 7%, but otherwise they've done so badly. 2 week 44% off, 1 month 40% off, for the year 65% off. At this point, I feel like all the bad news is already out and stock is going to slowly make its way up as we go forward. Next is home. These guys are into home furnishing, and looks like at home group share can double, says portfolio manager. I think this is a steady Eddie type stock. I'm willing to buy some on a down day and keep it for a while. As you can see here, nice sales growth, 27% for 1 year, 41% quarter over quarter, nice institutional ownership. It's got a good short ratio here. So that's why I'm willing to buy whenever there's a little bit, pull back and wait for a good news for, these shorts to get squeezed. Next is MoneyGram. MoneyGram, I think it's kind of, I think overall stock is doing nicely, good good uptrend, but right now it's $7 stock. Nice, I would not say nice, but good gross margin. Quarter over quarter, sales is positive, which is good. I'll probably buy on a down day, $7 stock, and take it from there. And I think even Zacks, they say MoneyGram stock, it's shows some progress, which is a good news. Now let's look at a couple more stocks here. PGen, which is Precigen, a little bit trading down, and now it's trying to make its way up. RSI is 48, which is low, and looks like they got some approval or a orphan drug designation from FDA, which is again a good news. And I think good sales growth here. I mean, not great, but it's okay, and nice gross margin and high float ratio. Any good news in this stock can send the stock higher, and they're down 32% from 52-week high. I'm willing to buy a little bit of this stock and wait for any good news, and probably shorts also will get squeezed. Translate Bio, as you can see here, it has fallen off the grace of late. Now it's trying to make its way up, and they got some unexpected testing flop. All these biotech companies, they have these hiccups once in a while. That's our chance to buy and hold it for a while. Translate Bio has very nice sales growth or a revenue growth, as you can see here, with the lower sales, 139 million revenue. I think they've got very nice sales growth, and um, they've got good institutional support, huge short ratio here. So, I'm willing to buy. It's down 45% from 52-week high. I think it's okay to buy some and participate in an upward move. Next is AI. It's C3 AI, Tom Siebel's company. I think finally they're showing some sign of life here. As you can see, up 9% for the week, but down 63% for the year. Nice gross margin. Any software company, you expect a good gross margin. I think this company also shows a good gross margin. I think at this point, I feel like probably this stock will start making its way up, and the stockholders will be really nicely surprised with the nice profit. Next is IIVI. This they got some manufacturing footprint expansion. They do power electronics and for electric vehicles, and also do some clean energy. I think this stock is really steady Eddie type stock. I'm willing to buy on any pullback here and take it from there. Nice revenue growth, as you can see here. Nice gross margin. They're down 18% from 1 year. I'm willing to buy some. It's a nice steady Eddie type stock. Next, let's go into Nova. It's again a solar type play, and as you can see here, they just completed the acquisition of a business from Leonard. Their Leonard's Sun Street Solar. I think it's $38 stock, low. It's a little bit lower RSI here, and nice sales growth. As you can see here, 19% for 1 year, 13% quarter over quarter, good gross margin. They're down 33% from the year, and now slowly, as you can see here, 3 month, 1 month, 2 week, all down, but now they're trying to pick up. So I think it's a good sign. They're showing some positive upward momentum. I'm willing to buy some and hold it. Next is apps, which is a digital turbine. It's a great stock. I've been buying this stock whenever it falls down or pulls back. Nice sales growth here, as you can see here, 85% for the year, 146% quarter over quarter. Good gross margin. I'm sure this gross margin can improve. Typically, software companies have gross margin above 70%, 80%. But I think it will improve its gross margin as we go forward. Down 13% for the week, so that's a really bad pullback. I'm willing to buy some and hold it. And as you can see here, it went up so much last year. I think it's okay to take some breather here. I'm willing to buy some and take it from there. Next is ChargePoint. ChargePoint stock, I think it's really took a beating here. Short sellers are breathing down its neck. And I think it's sold off at this point, 39 RSI. And they're also making some progress around their fast charging across the United States. I feel like companies are doing nicely, but really there's right now there is no revenue, zero revenue, as you can see here. But there's a hope that this company will really participate and expand fast charging across Americas. And huge short ratio, as you can see here, 75%, down 19% in the week, and down 25% for the 2 weeks, down 55% for the year. I think this slowly it will stabilize and go up. Requires little bit patience here, but I think it's okay to buy a little bit and wait for a nice appreciation in the stock price. Next is Editas. Ouch, so sad here. Stock has come down so drastically. I think this whenever biotech stocks like this come down so drastically, it takes some courage to buy the stock at this point and hold it for a long time and participate in a nice bull run. I'm willing to buy this at this point and take it from there. They got nice sales growth 1 year. Quarter over quarter is negative, as you can see here, but huge, short ratio here, 15% short ratio. They're down 65% for the year. So I'm willing to buy some and hold it for a long time. Next, let's look at EXPI, real estate play. Stock has done nicely last year. People are moving out. People moved out from apartments, bought some houses, but now stock has fallen off the cliff. From February onwards, or mid-Feb, it's fallen down. Right now, it's showing some sign of, at least some sign of consolidation or stabilization. From a news perspective, looks like EXP it's partnering with the company here to enhance property intelligence. But I think overall, if you see here, nice sales growth here, 1 year 64%, a quarter over quarter 122%. Gross margin can be improved. Right now it's a little bit lower, but I feel this stock is also fallen off so badly, and good sales growth and positive gross margin. I think it's good to buy some. It's fallen off 59% from 52-week high, but still up nicely for the year. And same story with growth generation. Nice stock chart here. It's a very steady Eddy type stock. Whenever it comes down, it always went up. I think it's a good time to buy some and hold it. If you look at the RSI, it's also showing some signs of improvement here, slowly ticking up, which is a good story. And people are also thinking about this growth generation. Zacks is asking, hey, is it a solid choice? If you look through this news, they're also indicating it's a solid choice, which is a good story. With growth generation, nice revenue acceleration here, 94% for 1 year, 144% quarter over quarter, and they're down 30% from their 52-week high, but up nicely for the year. I'm willing to buy some at this pullback and take it from there. Next is Marathon Digital or Marathon Patents. I think these guys have nice sales growth here. Gross margin is negative, as you can see here. High valuation, and they're down 32% for the year, but up from 52-week high, up nicely for the year. So with this stock, this is a Bitcoin play. I think whenever they're down, it's okay to buy a little bit. And as Bitcoin price goes up, these guys also will do well because they're into mining job. Looks like they're ramping up their mining, so which is a good story. I'm willing to buy stocks like Marathon Digital and even BTBT. Some of these stocks I'm willing to buy. Next is MP Materials. MP Materials looks like a nice looking chart. Right now it's a little bit downtrend here. If you see here, even the RSI is pointing downwards. I think it's okay to buy a little bit. Even though it takes a contrarian type approach because stock is falling off here. RSI is also pointing downwards. I think it's okay to buy some and hold it for a long time. And Zacks research also says this stock stands out strong in the industry, which is a good news. And this stock, I think, solid gross margin. They got $134 million in revenue, and short ratio a little higher, as you can see here. Stock is down 40% from 52-week high. So I think it's okay to buy some with this pullback here and hold it for a long time. Next, let's look at a couple for play stocks here. One is Silvergate. I love this stock. Whenever it falls down, I always buy this stock, which is proven right in the past. And RSI is also kind of stabilizing at this point. And nice revenue growth here, 14% for 1 year, 43% for quarter over quarter. And gross margin is zero. I think most of these Bitcoin stocks and bank stocks, they're showing gross margin zero, which is probably okay. And they're down 29% from 52-week high, but up 1200% from for the year. So with this downturn, I'm willing to buy some and take it from there. Skills again, its stock has fallen down so drastically. Looks like this company offered some public offering of common stocks. The moment you do common stock offering, stock always falls off because there is some dilution. There is more supply available because these folks are offering more stocks. So that's why it came down. But overall, as you can see here, nice gross margin here. They got $230 million in sales. Their float ratio is a little higher, but it's manageable. Down 67% for the year. I'm willing to buy some, hold it for long term. As you can see, our RSI is stabilizing. I think stock will also pick up as we go forward. Next is Space, Richard Branson's company. Stock has fallen off the cliff. Looks like Richard Branson also sold some of his stock. Space. Whenever this stock falls off, I typically buy a little bit and keep it for long term. This stocks generally bounces back pretty nicely. With this, I think their sales is down, as you can see here. 1 year sales growth is negative. Gross margin is okay, not too bad. High float ratio. It's always the case in this company, and I think overall down 62% for the year. With the stocks down so drastically, I'm willing to buy some and keep it for long term. Tilray, I think it's Tilray and Afria. They had a merger. Looks like Zacks is estimating this will outpace the market gains. So at this point, stock is down nicely, down 74% from 52-week high, up for the year as you can see here, down 13% for 1 week. I'm willing to buy some and keep it for long term. Next is BEKE Holdings. It's a China internet play. I think it's a good stock. I'd been buying whenever it's down. Now it's down, showing some signs of ticking up from a RSI perspective and also from a stock perspective. I'm willing to buy some. Looks like they missed their earnings, on April 11th. So I think it's right now the earnings is out. It's okay to buy some of this stock. As you can see, our gross margin is okay, 23%. They got huge sales, $10 million sales, down 7% for the week, down 35% from 52-week high, down for 6 months, down for 3 months. So I think it's okay to buy some of this stock and hold it for long term. Next is DraftKings. It's a sport betting play. As you can see, a stock has fallen off the cliff here, and even now it's showing some slow sign of progress here or consolidation here. I'm willing to buy some and keep it for long term. With DraftKings, it's got a good gross margin, $650 million in sales, and down 6% from the week, and they're down 22% from 52-week high. For 6 months, they're still 30% up. So I'm willing to buy some of this. It's a good stock, and we have other stocks also like Penn National and esports and a couple of those stocks which are also similar way. Next is Infosys, Indian IT stock. I think it's fallen off after the earnings. Infosys falls 5% on profit miss. I think it's okay to buy some. This is pretty steady Eddie stock, low price. It's a $18 stock. Good sales. I mean, it's okay sales growth, positive sales growth. And it's down 7% from 52-week high, up nicely for the year. I think it's good to buy in this pullback. Next is IQ. It's a Chinese internet stock. I think this came down drastically according to this Simply Wall Street. It's 33% undervalued. I think it's because of this whole Archegos fund debacle and margin calls. At this point, I'm willing to buy this. I've been buying this on pullbacks. It's down pretty nicely. I think their sales perspective, they're down up 20%, 0.20% for 1 year, barely down quarter over quarter. High short ratio here. They're down 47% from 52-week high. On a 1 year basis, they've done negative 20%. I'm willing to buy some of this and hold it for long term. I'm sure this whole fund debacle will pass, and we can make some money on this one. So next is Pinterest. Pinterest, as you can see here, it kind of came down a little bit. I'm trying to see if it can fall a little more, so I can buy around 70 range. Looks like news perspective, Pinterest stock slides on a cautionary analyst comment. Some say buy. I think it's okay to buy if it reaches a little bit down, and take it from there. Nice sales growth. I love this 39%, 76%. Nice gross margin. With the software, you expect a high gross margin, and down 10% for 1 week and up 348% for the year. So I think this stock, I'm willing to buy a little bit if it reaches around $70 and take it from there. Next is PLTR. It's Palantir Technologies. Stock has been selling off a little bit, as you can see here. Overall, I feel like this is a good stock. It's into a lot of these big data type play. Has a lot of business with the federal government, and they also have a commercial business now with the big data. I think it's a good stock. I'm willing to buy this stock, $22 stock, and RSI is low. It's oversold at this point. I think according to Motley Fool, it's one of the smartest stocks to buy at this point. I'm willing to buy this. It's a good company. It's Peter Thiel's company. I think it's a good one. Next is Plug Power. It's again EV play around the clean energy. Stock has fallen off so drastically here, and RSI is showing some signs of improvement here, some uptick here. Looks like Motley Fool is saying this stock has just bounced back a little bit, which is a good story. And from a revenue perspective, looks like they got 23% revenue growth for 1 year, 89% for quarter over quarter. That's very good. And the gross margin can be improved. It's 3% right now. I think they need to work on this. But short ratio is 7.5. They are down 15% for the year, and they're still up 506% for the whole year, 15% for the week, I mean. And I think it's because stock has fallen off so drastically and nice sales growth here, I'm willing to buy some and hold it for long term. Last but not least, here QuantumScape in this chart here, it's fallen off so badly. There is a short seller report saying this company really is not doing really great. As you can see here, they have no revenue. They're still working on their battery technologies with solid state. They got some institutional backing here, and float short is 8%. They're down 22% for the week. So they're down 34% for 3 months. I think overall stock has beaten up so badly with the short seller report. I'm willing to buy some and bet on solid state battery technologies with with Jagdeep Singh. Next, we got a couple more here. This is TME, Tencent, Music. Stock has fallen off the grace with this whole ArchiGhost debacle. Looks like they're also getting some new leadership team in place. They're getting a new CEO and chairman, which is a good story. And they've done nicely from a revenue growth, as you can see here, 12% for 1 year, 14% for quarter over quarter. Okay, good. Okay, gross margin 31%. That's good. They're up 66% for the year, but for 3 months, 1 month, 2 week, they're down. So I think it's good to buy some and wait for a nice pullback. Next is Zillow. Zillow is a good story into real estate business. They also buy and sell homes. I think stock has fallen off, very badly here. Now we know they're trying to consolidate and bounce back. I think this is also, one of the great place to work. They are in Fortune 2021 list of 100 best company to work, which is good. I think overall this stock, from a sales perspective, it's negative right now, revenue growth, but good gross margin, and float ratio is high right now. Short float is high, short interest is high at this point. Any good news, these shorts will get squeezed, down 35% from 52-week high, but up nicely for the year, 303%. So I'm willing to buy some of this and keep it for long term. Next is XPAV. I'm just listing XPAV here. Same is the story with the Neo, Lee, and even new Chinese a motorcycle type play, scooter play. I think all these stocks, all the Chinese EV stocks have come down nicely. I'm willing to buy some and keep it for long term. Last but not least, NLCH, which is Norwegian Cruise Line. I think it's the same story with the Carnival Cruise Lines, Royal Cruise Lines. All these cruise line stocks are really waiting for this CDC to give some permission to start cruising again. But right now, looks like senators call for cruise lines to shut down, which is not a good story for these guys. They're really, coming down with this news. I'm sure as more and more people get COVID shots, these cruise liners will open up, and that will give a good bounce to these stocks. So with that, I'm willing to buy this stock and hold for long term. Right now, revenue growth is negative, as you can see here. High, short interest at this point. They've done nicely for the year, but last 3 months they're negative, and this week they're down big. So with that, I'm willing to buy this little bit and keep it for long term. So with that, I think that's the wrap here. Thank you very much. Happy investing. Have a good one.